The gap in between the rich and the poor has grown to historic levels. Never before have we seen so much wealth leave the middle class and find its way to the richest of the rich. The central bank policies are designed in a way to ensure their primary focus is to evaporate wealth from the middle class and siphon it towards the elite and mega corporations. Although we have seen a general rise in wealth of certain groups of people in the last decade, we will see the next financial crisis leave them back to where they started or potentially worse off. You came here for the truth, so let me unveil that for you. It's funny the way it works. We see generally during these bull markets, people who are invested, they feel good, they feel confident. People with mutual funds and 401ks and pensions are all benefiting from what is happening. However, we see that time after time after time, the cycle comes to an end. And of course, the central bank decides when that cycle comes to an end. And as a result, the liquidity dries up and we have major problems for all of these different investments, especially when somebody is coming up on retirement. Maybe they can't work anymore for health reasons or other things that have come up in their lives, and now their pension, their 401k has been decimated. What are they going to do? This is a problem for not just a small group of individuals, of course, but particularly as we see a very large group of people right now heading into retirement. We are witnessing something that is truly historic. Part of the major changes that we've seen in the workforce have definitely been because of people that are 65 years and over having to go back into the workforce. That's never a good sign. Not because they shouldn't be working. Of course, if somebody wants to work, I think that's fantastic. However, we have seen time and time and time again, people have to work because they can't pay their bills. Another day, another repo operation. New York Fed adds $109 billion to the markets. Without the Federal Reserve's support, this financial system would collapse. There's no doubt about that. I don't think anybody is necessarily denying that anymore. What they are suggesting is that everything will stay propped up because the Federal Reserve is intervening. I happen to disagree, but of course only time will tell. My favorite chart, the global liquidity proxy and the S&P 500. We have watched the S&P and of course most stock markets around the world do very, very well. And this is a direct result of central bank intervention. I've covered it 1,000 times before, just showing you an update. On the other hand, we have this information. A third Hong Kong stock in less than a week lost most of its value in a sudden one-day plunge, underscoring concerns that the $5 trillion market has become a breeding ground for wild volatility. This particular company plunged as much as 78% before the trading was suspended. Now imagine you had an investment with this particular organization. Are you going to sell at this point? Are you going to be worried, or are you gonna say, well, don't worry, the central bank is gonna help me out? Of course, it's never gonna happen to me, it's never gonna happen where I live, it's never gonna happen to the stocks I own, I'm diversified, I own an ETF. That's right, I've heard it all before, but regardless, all I'm doing is showing you that this has happened in many cases historically, but also in the present. People are left in a state of panic, in a state of worry, because they extended themselves too far. This is just a chart that's associated with that. If you're interested, you can see this crazy drop off a cliff. It is quite intense. Now, one thing that is also rising in addition to the S&P 500 is the federal debt. It's up $1.3 trillion since last Thanksgiving. That's $10,000 per household. It is insane the amount of money that the government spends on a daily basis, on a yearly basis, and it doesn't seem to be stopping anytime soon. Of course, none of this can be paid back. The trouble here is that this is unsustainable, and we have watched even the central banks talk about how their governments are enacting policies that are in fact unsustainable. Jerome Powell happens to be one individual talking about that right now. But of course, you never have to worry because they will always revise everything to make it seem better than it is. Even the BEA has now reported the third quarter GDP stats at 2.1%. You don't have to worry about that sub 2% GDP growth. They'll just revise it higher. You don't have an issue here. Don't stop the party now. If you look at the Fed Beige Book, which is basically just showing us what the Federal Reserve is thinking right now, it is actively being updated. This is the latest report. It was posted on the 27th of November. And if you look through it, at least in the overall economic activity right at the beginning, it's all up. Everything is good, or at least modest. The growth is good, jobs are good, economy is good, everything is good. So why in the world do you need to have interest rates at such low levels? Why do you need to pump money into the markets every single day? And the Federal Reserve themselves suggested through October that they were printing up $190 billion a day. To me, that seems a little bit messed up if you think about it. Because on one hand, they're saying everything's all good. But on the other hand, they are doing things, they are taking actions as if it's a crisis right now. They're printing faster than QE3, and yet everything is fine. To me, that is just insanity. While we have articles and while we have interviews still trying to figure out, is this QE4 or is it not QE4? I really don't care what you call it. Call it Susie. I honestly don't care. I'm calling it QE4 simply because the balance sheet is expanding. Now, while they suggested this is organic growth of the balance sheet, we are on track to surpass the peak at which the Federal Reserve had, and it didn't take very long to reverse the trend. They were doing this QT policy, and it seems like only yesterday that they were suggesting that this wasn't going to be long, and they brought it up, I think it's 40% back to where it was. So it won't take much longer into next year, into 2020, where we'll see the balance sheet actually expanding to a level it has never been at before. Now, what happens in between now and then, we'll have to see, but that's the trajectory. The Cass Freight Index is an extremely important indicator to look at because that's going to give us a signal of what's coming in and out. We're going to see things from the ground. And this has actually fallen 11 months in a row. 11 months in a row. From last year into this year, we have watched this decline over and over and over. That's never a good sign when something month after month after month is getting pulled down. We have seen the PMIs recently actually come up somewhat, and I will of course bring you updates on that. But in regards to the Cass Freight Index, this is showing you that it has been subdued for quite some time. The car industry continues to get absolutely slaughtered. Audi plans to eliminate roughly 15% of its German workforce to eventually lift earnings by $6.6 billion. They're blaming electric cars as the reason they have to do this. Of course, ultimately, it means people are losing their jobs. We have seen thousands, tens of thousands of people in the automotive industry losing their jobs all around the world. These are middle-class jobs. These are well-paying jobs, and I'm not sure what they're going to do now because this is the trend for the entire industry. It's not as if, okay, well, Ford has done really bad, so they're laying off a bunch of people, and you could then go apply at all these different places. It's the entire industry going in this direction. They're going more to robots, they're going more to automation, they're streamlining, things are changing, and of course, we have the offshoring of jobs. And just to quickly note, by 2025, Audi plans to cut as many as 9,500 jobs in Germany and streamline operations at its two main factories in its home country. Another retailer is closing all of its stores. New Jersey-based arts and crafts chain A.C. Moore will close 145 stores. Of course, many people will be left without work. I read in here that up to 40 of the locations will become Michaels, so perhaps not all the employees are going to be laid off. We'll see what happens regardless. I'm just showing you that this is a continued trend. This time of year is usually very big for retail sales, and of course we'll see the data as it comes out, but I wanted to show you this statistic here, and that is credit card. The average interest on this credit cards right now in the United States is 17%. Now that is extremely high, especially considering the fact that the Federal Reserve has interest rates set basically at rock bottom. So you know that these companies are making an absolute fortune as long as they are actually getting paid, even if that is the minimum. But people today are maxed out on the amount of debt that they have. I'm interested to see what people do, because as I showed you in the previous video, people are still trying to pay off the debt that they spent last year. What does that tell you about the sustainability of the system that has been created? The situation is bad for many today, and here we are at the peak of the cycle, if you can believe it or not. Going to court without a lawyer is new normal for US litigants. And the reason why? They can't afford it. That's when you know you've got a serious problem. We should be starting to ask questions. Why is this the case? Not just trying to demand more. We should be asking why. What is the underlying root cause of these problems? As always, if you want to keep track of what's happening, layoffs, bankruptcies, and closings, dailyjobcuts.com is a place that I regularly check. I'm going to end the video there. If you found it informative, hit the thumbs up button. When you hit that button, you make a unicorn smile. So I wanted to thank you for that. If you want to build a business, if you want to create passive income, then you need to learn this. I created a free e-course for my subscribers to learn how to sell on Amazon. I teach you how to actually make this sustainable and make it a real business, not a fly-by-night thing, to actually make it persist. Check it out at the amazongps.com. If you want to learn about the financial system, how it works, how to make money, the foundation, the asset classes, everything in between, these two books have it all. Take a look at the link in the description if you want the audiobook that's available at themoneygps.com. Solutions, solutions, solutions. You want to know what you can do. You want to know what can be done about the situation. Can I do anything personally? Is anything going to happen? What's the situation? Watch this video. I get into it.